You're welcome to another day at the Banner Options University, and I'm so excited about today. I'm so excited about what we would be able to gather today, and I'm so excited about the degree of impact that every one of you will go home with today. I'm also excited about the fact that you guys are being empowered. I'm also excited about the fact that you guys are equipping yourself to succeed in a market that is filled with turbulence. Okay, so this route you guys have decided to embark on is a route to freedom, is a route to peace and prosperity. Okay, because you are currently learning a pattern, or a pattern that will liberate you from the shackles of pain. Okay, so I would say this is the best way to trade this market. Okay, as a contrarian, I choose to believe that this is the best way to trade the market as a contrarian. Okay, so I believe that the contrarians are taking over the market. Okay, because if as a contrarian you have the ability to enter at the best time. Okay, so we encourage our students to emulate the contrarian mindset. Okay, so um, today we're gonna proceed with what we have in store. Okay, so the USD card is what we're going to be treating. We're going to start from today. Um, and we've done the 5 minutes. We've done the 15 minutes. Okay. So we've also done. We had a repeat of the 15 minutes. Okay. So today we are going to be treating the 30 minutes. Okay. So because we realize that some people are not they are not open to day trading. Okay, so if you are not open to day trading, the 30 minutes candlestick chart is an opportunity to position yourself for trading opportunities in the market. Okay, so the 30 minutes chart is for people who are not open to day trading. Okay, what I mean by that is this: 30 minutes is a lot of time in binary options. Okay, so 30 minutes candles, um 4 of 30 minutes candle, that is already 2 hours. Okay, so if you are having 8 candles, 30 minutes candles, that's 4 hours, right? Okay, so and you know that for this particular pattern to form, you must have a sequence of formations. Okay, so you must have a sequence of formations, and if you are trading the 30 minutes time frame, candlestick time frame, you are having a bias, a mid to long term bias. What I mean by that is this: you are only open to checking the chart at intervals during a trading session, meaning you don't have the capacity to monitor the progression of the market. Okay, so you are only privileged with the opportunity of monitoring at intervals. So you don't have that luxury of time to focus or monitor closely the progression in the market. Okay, so with the 30 minutes candlestick, you have the privilege, it affords you the opportunity to trade binary options successfully. Okay, so with the 30 minutes candles, you can be rest assured that you are not going to miss a trade. Okay, because a trade that would form in a particular day would give you a sign the previous day. Okay, so with the 30 minutes candle, you know that at a particular point in time, you know when the market is likely to form or the pattern is likely to form, because you would have seen it on the chart 2 hours ago. Okay, and so, or you will have seen it on the chart an hour ago. So what you will just do is to position yourself for the trade, for the proposed trade. Okay, so the 30 minutes candles follows the same principles. Okay, but the only thing is the expiration time. Okay, so that's the only difference between all these candlesticks chart frame time frames. Okay, so the only difference is the expiration time. Okay, so the principles are the same, the entry the same, the expiration time different. Okay, so basically you want the formation, the hamster pattern to form, and what you want to happen is this: you want the pattern to form, and then you want to set an expiration time of 30 minutes. Okay, so from the previous sessions or the models that we have treated, you can see that the candle is proportional to the candlestick time frame is proportional to the expiration time. Okay, so you can see that the candlestick time frame is proportional to the expiration time. Okay, so if you are using a candlestick, a 30 minutes candlestick, you are targeting a 30 minutes expiration time. Okay, so you do not use a 30 minutes candle to trade and a 5 minutes expiration. You do not use a 5 minutes candlestick to trade 30 minutes expiration. You do not use a 15 minutes candlestick to trade 5 minutes expiration time. Okay, so you are using the proportionate candlestick for a particular expiration. Okay, so the 30 minutes candlestick is equivalent to a 30 minutes expiration time. So I want you guys to be clear on that. Okay, so the hamster pattern is what we've been discussing for so long now. So I know you guys are pros now. You are pros now with the pattern, and you can also teach me too. Okay, so I know some of you guys, you're already looking at it, and then you're already telling me which one is the confirmation candle, and I know some of you can see the confirmation candle already. Okay, some of you can see the divergence, and I believe that all of you know, okay, all of you guys know what this candle is called. Okay, so I am trusting and I'm believing that everyone knows the name of this candle. Okay, so and this candle is the Marubozu, and I've mentioned the Marubozu more than any other thing since we started this challenge. Okay, so the Marubozu is the candle that informs you of a transition or a transition in momentum or transmission or transition, any one of them. Okay, so it either tells you if there's a transition, okay, or a transmission of momentum. Okay, so the Marubozu is informing you that there is a strong momentum in the market. Okay, either to the upside or to the downside. Okay, so if the momentum is to the downside, you can call that momentum a bearish momentum. Okay, a bearish, that is a downtrend. Okay, so if the bullish momentum is towards the upside, you can say that the buyers are in control. Okay, so and one of the signs of a strong momentum is a break, the break of the Bollinger Band, that is the upper or the lower band. Okay, this is a sign of strong momentum. It's telling you that the market is firing. Okay, and so if you see this, you can be rest assured that the market is moving in that particular trend for a longer period of time. Okay, so the 30 minutes candlestick is very nice. I think it's a good way to start. I encourage new traders or novice traders. I choose not to use the word novice, but because I consider it derogatory. Okay, so I would rather go with new traders or newbies. Okay, so newbies, okay, should either start with a longer time frame, that's a longer expiration time, or they could learn the curves by trading CFDs with the hamster pattern. Okay, so the goal is to build confidence. That is the goal. Okay, the goal is to build trading confidence, and so in order to build this confidence, you need to win. Okay, so the more you win, the more confident you become. Okay, so losses are part of the game, but excessive losses will lead to a dampened morale. Okay, so you need to win in order to grow in confidence and belief. Okay, so what you need to find is a platform that will make it easy for you to win. Okay, so I'm not saying you are chasing the path of least resistance. I'm just saying that you must position yourself. If you are a newbie, or you are a new trader, okay, intermediate traders also, but intermediate traders can choose to go the path of binary options, the shorter time frames, because they have a measure of experience in the market. Okay, but new traders should settle for the longer time frame. Okay, so new traders should settle for the longer time frames. What I mean by the longer time frames, I'm talking of 30 minutes. I'm talking about 1 hour expiry, which we'll be talking about in the subsequent class. Okay, so I'm talking about 30 minutes expiry. I'm talking about 1 hour expiry. Okay, and by the way, never trade 1 minute expiry. 1 minute is not for people with a system. Okay, the 1 minute expiry is not for people that have generated or created a trading system or strategy. Okay, so the 1 minute expiry is prone to fluctuations and is prone to movements that you cannot control. I call it noise. The market is noisy. The 1 minute candlestick is too noisy. Okay, so you don't trade 1 minute. It's a no. Never trade 1 minute, okay? Because the market is too noisy for you to interpret. Okay, so you can start trading from the 5 minutes, the 15 minutes, the 30 minutes, the 1 hour. Okay, so the strategy also works for 1 hour. Okay, so like I said, the new traders can start from CFD. What I mean by CFD is forex, stocks trading, and commodity trading. These are derivatives that don't have time. Time is not involved. Okay, so and because time is not involved, it becomes easier to progress. Okay, so but you see, binary options is the most sophisticated derivative because it entails direction and time. Okay, so you do not, as a new trader, do not start trading the most sophisticated. Okay, you have to start trading the one that is not so difficult so you can build confidence. Okay, so you can start trading binary options with a longer time frame, 1 hour, 30 minutes. Okay, so we advise and it is highly recommended for new traders to start with a longer time frame, the longer expiration time. Okay, so to start with 30 minutes expiration time, the 1 hour expiration time, or the CFD stocks, forex, or commodities. Okay, so new traders should start with the longer time frame, 30 minutes expiration or 1 hour expiration, or CFD, forex, commodities, or stock. Okay, because binary option is the most sophisticated of all these derivatives because direction is involved and time is involved. Okay, so if you are trading something that has time as part of the contract, so you know you are racing against time. Okay, but the CFD stocks, forex, and the commodities, you are not racing against time. Okay, the only thing you are doing is direction, and even if it takes 2-3 weeks for an asset to hit your target point, you are not going to be penalized. You just pay some minor broker fees. Okay, so but if you are trading the binary options, you don't have the luxury of time. You do not have that time flexibility to make a trade that is not accurate. So that is why you have to enter the market at the best time so that you can win. Okay, so that is why this hamster pattern strategy, it is a wonderful strategy for trading all derivatives because it was created for binary options, and because binary options is the most sophisticated, you can use the strategy for every other derivative. Okay, so whatever works for a derivative that has time and direction will surely work for a derivative that has only direction involved. Okay, so I hope you understand what I'm trying to say. Okay, so now let's go straight to the chart. Okay, so you have the US dollar card, and you know the first thing we look out for, and the first thing we look out for is a bullish or bearish momentum. So you are scanning the market for an asset that is trending in a very strong manner. Okay, so that is the first thing you look out for during your watch list session. Okay, so you are scanning the market for an asset that is closing outside the Bollinger Band. So you are scanning the market for assets that are closing. They are opening inside the band and closing outside the band. Okay, so as soon as you notice any market displaying this behavior, okay, so as soon as you see any asset closing outside the Bollinger Band, that you must put it on your watch list. Okay, so your watch list should be composed of assets that are closing outside the Bollinger Band. Okay, so you want the assets to close outside the Bollinger Band. Okay, so in this case, you can see clearly that the price is closing. You see the Marubozu is a very large Marubozu. The Marubozu, by the way, this is 30 minutes. The beginning of the candle till the end of the candle to the close of the candle is 30 minutes. It takes 30 minutes for it to open and close. That's what they call 30 minutes candlestick. Okay, so this is a very good Marubozu. And the Marubozu closes outside the Bollinger Band. Okay, so and now you want a corresponding close outside the 30, because in a downtrend you are not using 70 this time, it's 30. 30 is the lower level of the RSI, which is considered oversold. So you want a cross from top to bottom. You want a cross below the 30 oversold RSI level. Okay, so as soon as there's a cross on the RSI of oversold level, you want to look out for a cutback or a retracement into the Bollinger Band. Okay, so if there is a retracement into the Bollinger Band, the next thing you want to look out for is a continuation of the trend. Okay, in this case, you can see clearly that it's a downtrend. Okay, but you want a continuation of the trend. Okay, so you are looking for a trend continuation. Okay, so the trend continues inside the Bollinger Band and crosses. You are looking for a cross of this level. This is our support level, if you can remember. This pair of jeans concept. Okay, so always remember the pair of jeans concept. It will help you draw support and resistance lines. Okay, so according to the pair of jeans concept, this is a strong support level, a level that the buyers found interesting or attractive. Okay, so this is a support level. So you want the price to cross this support level from top to bottom. Okay, so as soon as price crosses this level, you are looking for a confirmation candle to form. So as soon as price crosses the support level, the next thing you are looking for a confirmation candle. The confirmation candle is what signals an entry point. Okay, it signals a trade, an entry point for a trade. Okay, but you do not trade immediately after the candle, the confirmation candle forms. You have to wait for a retracement. Okay, you have to wait for the next candle to retrace to the level of the lower body of the confirmation candle. As soon as the price retraces and touches the lower body of the confirmation candle, which is this nice Marubozu slash, it's a Marubozu combined with a small hammer. Okay, so this is a very nice formation. So you want the price to the next candle to touch the lower body of the confirmation candle. As soon as it touches the lower body of the confirmation candle, you place a trade. That's a 30-minute trade. Okay, so you are going to trade 30 minutes, and in the next 30 minutes, you are going to get a win. Okay, because you know that the price can never penetrate this level again. Okay, so you can see it's a clear win. So let's move on. The USD, let's treat the second one. The USD CAD also. Okay, so the USD CAD is a very nice currency pair, and is one of my favorites. The USD CAD and the AUD USD. Those are two pairs that are fantastic. The AUD USD and the USD CAD. They are very good for binary options. Okay, so you're looking for the price to close. This is a very wonderful chart. Okay, so you want the price to close out of the Bollinger Band. Okay, and then you want the price to go back inside, and then you want the price to cross the support level over here to form a lower low. Okay, so it has formed out already, and you want the price to form a confirmation candle, then a retracement before you enter. But there is a slight issue with this formation. You can see clearly that the divergence was not obeyed here. According to the principle of the divergence, you want a lower low on the chart to produce the higher low on the RSI chart. Okay, but you can see clearly that the lower low is producing a lower low. You can see clearly the lower low is producing a lower low, and so this is a convergence, it's not a divergence. So you are looking for a divergence. Okay, so it has failed. So let's move on. You are, the next one is this. On the same chart, you can see another opportunity. Okay, there's a cut outside the Bollinger Band. The price closed outside the Bollinger Band, and you can see clearly. And so you want the price to cut back into the Bollinger Band, and then you want the price to cut down to cross this support level over here. As soon as it crosses it, you are waiting for a confirmation candle. See the confirmation candle over here, and the next thing you are waiting for is a retracement back to this level. So you can see the price retrace back to the lower body of the Marubozu, and then you can see the next candle is a winning trade. So it's a winning trade. Okay, see what happened? If you had not waited for a confirmation, you will have lost. You see the importance of waiting for a cut back to the lower body of the confirmation candle. If you had not waited for the cut back, you will have lost. So, but because you waited for the cut back to the lower body of the confirmation candle, you'll be rest assured that you can never lose. And even if you lose, because nothing is perfect in life, you will lose 1 in 10. Okay, so let's move on. The next one we're going to be treating is also USD CAD. I love this currency pair. USD CAD is a very nice candlestick. Is a very nice currency pair because the patterns are quite predictable and they repeat themselves well. Okay, so now you want a breakthrough. Okay, so you want to break through the Bollinger Band. You want the price to cut through the Bollinger Band and close outside the Bollinger Band. Okay, so you can see the price pierced through. It pierced through the Bollinger Band and it closed outside the Bollinger Band. And so when you are doing your scanning or you are doing your watch list, the first thing you're looking out for is the close outside the Bollinger Band. Okay, so you are looking for a close outside the Bollinger Band. So the next thing you are looking for is a retracement into the Bollinger Band. From outside into. Okay, so you are waiting for price to move into the Bollinger Band from outside. And as soon as price moves into the Bollinger Band, we call that the retracement. Okay, so the price is retracing back, which is a sign of weakness. The trend is getting exhausted and it's going to reverse soon. So it's telling you that the momentum is shifting from a strong to a weak or intermediate level. Okay, so the momentum is shifting and it's telling me that the bears are running out of steam. The bears are running out of steam. They're running out of fuel. Okay, so the bears cannot sustain the move for too long because a retracement has occurred. Okay, so the next thing you're looking out for is the price moving out of this support level to cut through the support level to form a lower low. Okay, so you can see clearly that a lower low was formed here and is confirmed by the divergence on the relative strength index. As soon as the divergence is confirmed, you have to confirm that the confirmation candle is the Marubozu or the AMA or the star. Okay, and ensure that the upper wick of your confirmation candle is not showing too much of great resistance or rejection. What I mean by that is this: ensure that the upper wick is not too long. Okay, so what you're looking for is a nice AMA with minimal wick or no wick. Okay, so you don't want a wick, or you want minimal wick on the upper body of the confirmation candle in a downtrend. Okay, so you are looking out for a AMA that has little wick on the upside, little wick in the upper body, on the upper body, and then you are looking for the confirmation candle that has a nice. For instance, you look at this now. This is a nice rejection. This tells me that the buyers are moving. It tells me that the price is too attractive to them in such a way that they want to buy it now. Okay, so you can see this rejection on the downside. It tells me that the price will not drop again. Okay, so the next thing you're looking for is you don't trade the confirmation candle. You wait for a retracement back to the lower body of the confirmation candle. Okay, so you wait for price to retrace back to the lower body, and you can see clearly there is a retracement back to the lower body. You see price move from here to the lower body of the AMA. Okay, you see the AMA. This is a lovely AMA. Okay, so this AMA indicates that the bulls are about to take charge and take control of the market. Okay, so when you see AMA in a downtrend, it's an indication of a change in power. Okay, it's an indication of the power change in the market. It's an indication that the control is gradually shifting from either the bears to the bulls or the bulls to the bears. Okay, so when you see the AMA in a downtrend, this indicates that the power is shifting from the bears to the bulls. The bulls are about to take over the market, and so it means that an uptrend is around the corner. Okay, so when you see this formation, you have to wait for a cutback. You have to wait for price to retrace and touch the lower body of the confirmation candle. Okay, and ensure that the RSI divergence is obeyed. You can see it's obeyed over here. The lower low did not form a lower low in the RSI. Okay, so that's a good trade. So you set an expiration of of 30 minutes. Okay, so like we discussed earlier, you use the 30 minutes for a 30 minutes expiration. Okay, so let's proceed. The next one is the Great British Pounds USD. The Great British Pounds USD. This is another established candlestick chart or a chart candle or a currency pair for. Is an established currency pair for binary options or for other derivatives also. Okay, so if you are trading Great British Pound USD, you are rest assured that you are going to make consistent progress, because the chart is not a chart that can move in a very unpredictable way. The chart is quite predictable and is usually under control. Okay, so what you're looking for, as usual, a cut outside the Bollinger Band. Okay, and then you want a retracement back into the band, and then you want price to move back up to continue the trend, and you want the price to cross or cut the previous resistance level. You will see it. You can see this clearly cuts it. It clearly cuts it. You can draw a line here, and then you wait for the price to cross above the line. You can draw a line here. Okay, you can draw a line here to make it easier for identification. Okay, so you are waiting for price to cut through the line, the support line the resistance line that you've drawn over here. Okay, so as soon as price cuts through the line, the price would form a new high. So that's what we call the higher high. Okay, so that's what we call the higher high. So the next thing you're waiting for is for the price to, you're waiting for the formation of a confirmation candle. And you can see this excellent AMA formed over here. It's an excellent AMA, although the wick is not too long, but it's still excellent because you can see the lower body contains no wick. So whenever you see a candle formation or a confirmation candle that does not have any wick in the lower and in the direction of the new trend, in this case, the direction of the new trend is the downtrend. Okay, so in an uptrend, your confirmation candle should have minimal wick on the downside. Okay, so in an uptrend, the confirmation candles that have the wick on the side of the trend, on the side of the previous trend, in this case is an uptrend. So if it's an uptrend, if you see the confirmation candle having a wick in the direction of the uptrend, it's an indication of a great rejection, and the price is not going to move higher. So that is a form of keeping yourself confident. It's a form of confirming that you are on track. So whenever you see the formations, the hamster formations with the wick in the direction of the trend, are the strongest formation. Okay, so when you see the hamster pattern having this kind of formation, these are the most reliable. I would say this is even the most reliable kind of hamster pattern. Okay, because you are rest assured that this is $1 million kind of pattern. Okay, because you know that this trade can never go back up again, because you can see there's a rejection on the upside. That whenever you see a wick on the upside or on the downside, that is great rejection. So wherever you see the wick, you can see there's rejection over here. There's a rejection over here. You can see it. Whenever you see a wick in the direction of a trend, it's indicative of great rejection. Okay, it tells us that the buyers don't want to buy again, and so they are pushing it. They don't even want to buy. What they want is that they want a price to go down so that they can start buying. Okay, so it's a great resistance to an increase in price when you see a wick in an uptrend. Okay, so whenever you see an accumulation of wicks, it is a sign that the market will soon crash. Okay, so whenever you see accumulation of wicks in the direction of a trend, it is a sign that the market will soon crash. I repeat. So the wicks are like they're like an expo as to what is going to happen. Okay, so when you see the wick forming in an uptrend, it tells you that the bullish momentum is about to fade. It tells you that the bullish momentum is about to decline. Okay, it tells you that the bullish momentum is about to weaken. Okay, so in an uptrend, the wick is indicative of a transfer of power. It's indicative of a shift in the market dominion. Okay, it's telling me that the bulls, very soon the bulls will no longer be in charge. That's what it's telling me. It's telling me that the bears are fighting. The bears are fighting to take charge, to take control. Okay, so the next thing you are looking for is for price to cross above this resistance level, and you want the price to tag along the Bollinger Band. You don't want the price to cross the Bollinger Band again. So as you can see, the price did not cross the Bollinger Band over here, and because it could not cross this Bollinger Band over here, it tells me that there is no strength in the market again. And it tells me that that the market will soon crash, because the buyers will soon see that this asset is no longer lucrative. Okay, so the buyers will start selling too. Okay, so the next thing you need to look for is the confirmation candle. You can see the confirmation candle over here. Okay, but ensure and make sure that you never trade the close of a confirmation candle. Always wait for a retracement back to the upper body of the confirmation candle. Okay, so always wait for a retracement, for price to go back to the upper body of, look at it, this is the upper body. Always wait for price to go back to the upper body of the confirmation candle for the touch of the upper body of the confirmation candle. So price will go back and touch the upper body of the confirmation candle. And as soon as price goes back to touch the upper body of the confirmation candle, you place your trade, you place a 30 minutes trade. Okay, and the 30 minutes must be 30 minutes dots or more. Okay, you are not allowed to trade 29 minutes. 29 minutes is not the strategy. 29.56 is not it. Ensure that you have 30 minutes. You can see the 30 minutes full. Okay, so and what you do is that you set the next 30 minutes expiry. So it must be 30 minutes. If you can't get 30 minutes, you can go for 31 or 35 minutes. Do not go for less than 30 minutes. Okay, let's move on. So the next one is the Great British Pounds USD. Great British Pounds USD. Okay, so you know what we are looking for. You all know what we are looking for. We are looking for the price to close out of the band, and this is the same language we'll be speaking. So we conclude this challenge. Okay, so you are looking for price because it has to get into your subconscious. You are looking for price to close out of the Bollinger Band. Okay, and then you are looking for price to go back inside the Bollinger Band from outside in, from out in. Okay, so whenever price closes outside the Bollinger Band is a sign of strength. Whenever price moves from outside back inside the Bollinger Band is a sign of weakness. Okay, so now you are looking for the price to cross out the Bollinger Band and go back inside and continue tagging you can see it could not close out again. So you are looking for a point whereby the price cannot close outside the Bollinger Band again. Okay, so you are looking for a point whereby the price cannot close outside the Bollinger Band again. Okay, so and then you must have confirmed that the price has moved beyond the previous support level over here. Okay, you can see the support level over here. So you want the price to close below this level, and then you want the price to tag along the Bollinger Band. You don't want it to close outside the Bollinger Band, and then you want a confirmation candle. Okay, so as soon as you get the confirmation candle, you can see this lovely green Maribozu. Okay, so you want the price to form this way by forming this nice confirmation candle, but you never trade the close of the confirmation candle. Always wait for a retracement back to the lower body of the confirmation candle. So you can see a price retraced and came back to the lower body of the confirmation candle. And as soon as you notice a touch, just one touch, not two touches, just one touch, the first touch, you trade the first touch of the lower body of the confirmation candle. And then you set a 30 minutes expiration time. Okay? Let's move on. So the next one, this is an example. This is also a Great British Pounds USD. Okay, so you want the price to close outside the Bollinger Band, and then you want it to retrace back into, you want price to close outside the Bollinger Band, and you want the price to retrace back into the band, and then you want the price to continue inside the band. Okay, so and then you want to ensure that the price does not close outside the band again, and then you want to confirm that the divergence is obeyed. Okay, so and then the next thing you want to look out for is the confirmation candle. Okay, you want to make sure that the confirmation candle is a good confirmation candle. Okay, so in this case you can see that the confirmation candle is a very nice, very beautiful armor. Okay, so you can see the formation of this armor. You can see the armor formed over here. Very nice armor with even minimal upper wick, and you can see the lower wick is very long. It's telling you that there's a great price rejection on the lower layer or the lower surface. Okay, so you can see that there's a price rejection below this level. Okay, so it is telling you, and that gives you confidence and guarantees that price will never retrace back to the downtrend. Okay, so the next thing you are looking for is for the price to retrace to the lower body of the confirmation candle. Okay, as soon as the price retraces, because this is a very lovely confirmation candle, I know this trade can never lose. This one is 100% sure. Okay, so you want the price to cut back to with experience, you'll be able to classify the setups in an order of accuracy. Okay, with experience, you'll be able to rate the hamster pattern because the patterns are not the same. There are some formations that are of greater accuracy or greater strength. Okay, so there are some formations that are of greater strength. Okay, some formations are greater than some formations. Okay, there are some hamster formations that you can close your eyes and say this is a winning trade. There are some that you look at and you say no, this is not a clear opportunity. It's going to win, but I don't think it's going to win with 500 meters or by a mile. Okay, so you there are some that you look at and you just know, you just trade and you walk away. You don't even check, you won't even check the whether you won or not. So you just walk away because you know that that setup is going to repeat itself because you've gone through previous history and then you've validated the fact that that particular pattern had occurred in the past. Okay, so that is the importance of going through the previous history of a chart. Always go and study. Go to the history of a chart to study the pattern and the behavior of the pattern. Okay, so some charts, some currency pairs actually show repetition. Okay, they show a particular repetition. So when you see the behavior repeat itself, so you are going to take the opportunity because you know that you've seen it before. Okay, so the patterns repeat themselves. Okay, the behavior of the market does not change. It's the same buying and selling. Okay, so it's the same buying and selling. Okay, I will not buy when something is too expensive. I wait for it to drop, and I will buy when it has dropped. That is the same. It's the same psychology everywhere. You don't want to buy something when it's too expensive. You want to buy when it's cheap by your estimation. Okay, so you don't want to buy something when it's overpriced. You are going to wait for it to drop first, because if the buyers don't see anybody to buy their products, they will drop the price. Okay, so if people are not buying a particular commodity, the vendors will drop the price. Okay, so and if they drop the price, that will stimulate the buying rally. Okay, so a drop in the price will stimulate the buyers to enter the market and start buying. Okay, so if the price of an asset is very low, of course it becomes attractive for people to buy. Okay, so if the price of an asset is low, there are more people that will want to buy as long as the asset is of good value. Okay, so if an asset is valuable to people and it is currently being sold at a very competitive price, such an asset will rise in price because in the long run the demand will push up the price. Okay, so you are looking for the price to come this way and the formation of the confirmation candle with a retracement. Okay, let's move on. So this is the AUD USD. You can see that the price moved up, then cut back, went back up. Okay, and then went here, kept going, and you can see the confirmation candle over here. Can see the confirmation candle over here. See the confirmation candle over here. And the next thing you can notice is that there's actually a cutback. You don't trade the close of the confirmation candle. You wait for a cutback to the upper body of the confirmation candle. As soon as you notice the touch of just one touch, a touch of the upper body, you place your trade and you place the 30 minutes expiry. Okay, and also make sure that the divergence is obeyed. The AUD USD is a similar one too. Okay, so you want the price to close down, you want price to retrace back into the band, you want the price to close below the previous support level and then form a confirmation candle. Then you want price to retrace and come and touch the lower body of the confirmation candle before you enter the trade. 30 minutes expiration time. The RSI is obeyed. Okay, it has obeyed the divergence principle. Okay, let's move on. Okay, so this is another one. Okay, you want the price to cut out of the band, and you want the price to retrace back into the band. Then you want the price to close above this support level over here. Sorry, the resistance level over here. Okay, the resistance level over here, you can see it. So you want the price to close above the resistance level. As soon as price close above the resistance level, you want the formation of a confirmation candle. You can see the confirmation candle. This is a nice red, beautiful Marubozu candle with a nice upper wick. The upper wick is indicative of the price rejection. Okay, so the next thing you want to wait for is that you want to wait for price to retrace back to the upper body of the confirmation candle before you place a trade 30 minutes. Okay, so the next one is the AUD JPY, and I said AUD JPY is a very good pair too. Okay, so you are looking for price to close. You are looking for price to close below the Bollinger Band, outside the Bollinger Band, to cut through the Bollinger Band from inside out. Okay, and so you want the price to cut the Bollinger Band, and then you want the retracement back into the band, and then you want a continuation, and you want the continuation to cut the previous support level, which is in a downtrend. In an uptrend is a resistance level. Okay, you want the continuation to cut the support level over here. As soon as the price cuts the support level, you want the formation, and okay, you have to look at and ensure that the price does not cut through the Bollinger Band again. At that point, you are now looking for a confirmation candle, and you can see the formation of this lovely hammer. Okay, so you can see the hammer formation over here. Okay, so and you don't trade the confirmation. You have to wait for price to retrace to at least the lower body of this candle. You can wait for it to go slightly down closer to the middle wick, because the size of the hammer, the body of the hammer is very, very small. Okay, so it might not give you an accurate representation of what the body is. Okay, so you want the price to retrace and touch an area very close to the middle of the wick. Okay, so as soon as the price retraced and closed and touched this level, the middle of the wick, the lower wick of the confirmation candle, you place at 30 minutes trade, a full 30 minutes. In the next 30 minutes, it must not be 29 points. 30 is 30. 30, you can trade 31, 35, but do not trade less than 30. Okay, I'm emphasizing this. I know why I'm saying this. Okay, so let's move on. So this is another one. You can see clearly that the price cut through the Bollinger Band and then retraced back into the band, and then you can see an upward formation. You can see that the price went up again and cut this previous high. You can see, and then the price, you can see the formation of the candle. You can see the formation of the candle, the confirmation candle. So you want the price to cut back and touch this the upper body of the confirmation candle, and so you can see it's a clear win. Okay, so let's move on. You want the price to close outside the Bollinger Band. Okay, you want the price to close outside the Bollinger Band, and then you want the price to cut back into the Bollinger Band again. Okay, then you want to see the formation of the confirmation candle. Okay, so as soon as you see the formation of a confirmation candle, you wait for a retracement back to the level of the upper body of the confirmation candle, and you can see clearly that this is a losing trade. Okay, it's a losing trade because you can clearly see that like I said, you cannot win all the time. Okay, there are times when you will lose 1 out of 10. It's normal. Okay, so you can see this is a losing trade. It's a losing trade. Okay, so you can see that the losing trade is part of the system. Okay, so you will lose some. Okay, so the next thing you want to see is that you can see that another confirmation occurred here. Okay, so you can see another confirmation here. Okay, so and it went up again. You want to wait for a touch here, and I think it slightly won this. Okay, situations like this, I don't advise you to continue trading when you see a loss in a particular currency. It is indicative of something going on in the macro level. Okay, it's a macro economist that is controlling this market and is causing it is causing it not to conform to a strategy. Okay, so when you see a currency pair not obeying the hamster pattern, there is a macro economist that is superseding. Okay, there's a macro economy that is overwhelming that particular asset. Okay, so what you want to do is, when you see a loss after applying the hamster strategy, the hamster pattern strategy, and you see a loss, you have to walk away from that asset. Do not try to pursue it or trade another one within 30 minutes or within 1 hour. Give that asset time to balance or normalize. Okay, so do not trade further. This is a very good example of what I'm saying. You know, there's a macroeconomics. The macroeconomics controls the market. Okay, the macroeconomics feeds the market, is the food of the market. Okay, so the technical reaction of the market is represented by candlesticks. Okay, so when you see the candlestick, is a reaction to the macroeconomics. Okay, so the macroeconomics is something that you can, especially for currencies that is controlled by larger forces. Okay, so you can't know what is happening in the macro level but before it is released. When the news is released, it is delayed because it has happened long before the news is released. Okay, so the macroeconomics is something that you put into consideration, and that is the reason why there's no strategy that is 100% accurate. Okay, because the macroeconomics will control it controls every market. So there is no strategy that is 100% accurate because of macroeconomics. Okay, you do not know what is going to happen. You don't know when war will start. You don't know when bombing will start. You don't know when anything can start. Okay, so you can't predict what is going to happen the next minute. Okay, and so the market is deriving its nutrients from the macroeconomics. Okay, so the macroeconomics is what fuels the market. And so that's why I said you cannot have a strategy that is 100% accurate because of macroeconomics. Okay, you can't predict what is going to happen the next minute. Okay, so you can see this is an example of what can happen. You know, the loss is part of the game, but the main thing is that the successful people win more than they lose. Okay, so the next one is the last but not the least is the Euro Great British Pounds. You can clearly see that the price moves out of the band, cuts back into the band, forms a higher high over here, and then there is a confirmation candle over here. but do not trade the close of the confirmation candle. Always wait for a retracement back to the upper body of the confirmation candle before you trade. As soon as price retraces back to the upper body, you place your trade. This is actually a put option. Okay, so with this, I believe we've learned a lot today. The 30 minutes, you can see this is ideal for new traders that are people who are new, or intermediate traders. 30 minutes is very good. 30 minutes is very good for people who want to have enough time to analyze the market. Okay, so I recommend this to traders who are starting newly. I recommend this to people who have intermediate level of expertise also. Okay, so I believe you guys have been richly blessed today, and we've been able to further impact you and educate you on the principles of this wonderful trading strategy. Okay, so I believe you guys have been impacted today, and I'm looking forward to seeing you guys tomorrow. Okay, so thank you once again for joining in. See you tomorrow. Bye for now.